Good morning, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago, bringing you some commentary on Monday, September 23rd in the energy market. So let's get started. Crude prices here, quite a bit weaker coming in this morning. Currently, November crude oil is trading down around 103.54. We're off about $1.21. Brent's weaker also, down about $1 at around 108.20 area. The rest of the market's weaker as well. Nat gas, that's off about 2 to 3 cents here, trading around 373 half area. The complex weaker, both products down over 3 cents. So quite a bit weaker tone here. And before we get down to some of the fundamentals and technicals in the market right now, I think it'd be a good idea to pull up some of my prior posts here from last week and kind of take a look at that. One of the things I was mentioning was this particular area down around the 103 half area as a possible target. And if you look at the price action that we saw there, last week, Wednesday, we saw that market kind of jump up a little bit after the Fed announced that they weren't going to be doing any tapering, and that we also got a bigger draw than expected in crude oil. They were looking for a draw of about 1.25 million barrels, and it came in around 4.2 million barrels. So we kind of caught a little bit of a move up there on Wednesday, a small bounce higher, which is something that I had mentioned we could possibly see happen. And then we really saw prices start to roll over there on Thursday and Friday, and here we are getting additional follow through today. Now, taking a look at some of the manufacturing data that came out of China here recently, and I think it's really interesting because the report was actually somewhat of a bullish report. But if you look at their copper imports here over the last 2 months here in July and August, they're off significantly. It's off about 10%. So it kind of leads you to question here, how can, if their manufacturing is so strong right now, why is it that copper imports are actually dropping off pretty substantially? Do they already have a huge stockpile of it, or is it that the report maybe can't be trusted? I'm not sure, but it kind of throws up a red flag for me. And the reason I point that out is because, as we know, China has a voracious appetite for raw goods and commodities, and they could be seen as a potential, strong demand there for crude oil. So nonetheless, something to keep an eye on here. But we are seeing a weaker tone here, and that market kind of coming down here into this area where the market could possibly find some support. So I think it's important. Take a look at your short-term technical indicators. Right now, they're actually telling me we're a little bit into the oversold area. So if this area starts to hold here a little bit, we could see a possibility for another bounce up. But ultimately, again, I'm still looking at the weaker side here for oil. I think next target could be down around $100 a barrel. So, we've got to watch for EIA data coming out here on Wednesday. We'll get a sneak peek here tomorrow, kind of get see what traders are really expecting. Give me a call, shoot me an email. I'll be more than happy to share that information with you. And then we'll move into Wednesday and look and get the actual numbers there. But, you look at what's going on right now. Our equities market, S&P, for example, has been a bit weaker here. We talked a lot about the stuff going on in Syria, and notice how that's really kind of fallen here to the back burner. Still a lot of problems over there. It's not being hyped up in the news right now, so you're seeing additional fear premium, I think, coming out of the market. So I do have some ideas and strategies on how you can play this. Give me a call, shoot me an email. I'll be more than happy to talk with you. And of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.